Hello and welcome. Today we're diving deep into an IPO for a company that is, well, quite literally part of the fabric of our lives. We're talking about Shree Ram Twistex. Let's find out if this is an opportunity worth weaving into your portfolio. And that, of course, brings us to the big question on every single investor's mind. Is this IPO going to make you money, or are you going to lose it? Is this a chance to spin some profit, or are you just going to get tangled up in a bad investment? That's what we're here to figure out.
So, first off, who even is Shree Ram Twistex? Well, just think about the clothes you're probably wearing right now. Your jeans, your t-shirt, maybe even the towel you used this morning. This company makes the yarn, the actual thread, that gets turned into all of those things. They are right at the very start of the whole clothing supply chain.
Okay, let's get into how they actually make their money. Their business model is, pretty straightforward. They buy raw cotton, they spin it into different kinds of yarn, basic cotton yarn or maybe a stretchy one with Lycra mixed in, and then they sell that yarn to factories that weave fabric and make clothes. Simple, right? But there's a catch.
Their entire business rides the wave of the textile cycle. See, when people like you and me stop buying as many clothes, well, the big factories need less fabric, and that means they order way less yarn from companies like Shree Ram Twistex. So their success is totally tied to the ups and downs of the fashion and textile industry.
So whenever a company goes public and asks for your hard-earned money, the first question you've got to ask is, where's it all going? Let's follow the money trail from this IPO to see what their big plan is. Now this is where things get really interesting. Look at this. A huge 44% chunk is for working capital, which probably means buying more raw cotton. But check out the next biggest slice. Nearly 40% is for a wind power project, and another 7% for a solar plant. See, in the yarn spinning business, electricity is a massive cost. So investing in their own green energy, that's a super smart move to control those costs for the long haul. All right, let's flip over to the bright side. Every investment has its pros, and honestly, Shree Ram Twistex has some pretty compelling numbers. Let's see what's making this company look so strong. First up, revenue. They've seen some really solid growth here, climbing from 233 crores up to 262 crores in just the last financial year. That is a really healthy trend, and it shows people are buying their stuff. But here's the number that'll really make you sit up. Their profit has quadrupled, a 4x jump. In just 2 years, they went from 2 crores to 8 crores in profit. I mean, wow. That kind of explosive growth is exactly what gets investors excited. And this next point shows they're getting really efficient. Their cash cycle has been cut in half, dropping from 71 days all the way down to 34. Now, what does that actually mean? It means they're getting their money back from buying cotton to selling yarn twice as fast. For any business, that is an incredibly healthy sign. And to top it all off, their factory is just humming along. They're running at 87% capacity utilization, which basically means the plant is running at almost full speed, all the time. This tells you demand is strong and they're running a tight ship to meet it. So yeah, a lot of positives here. But it's not all sunshine and rainbows. We've got to look at the other side of the coin. Every investment has risks, and this one, well, it has some pretty significant red flags you absolutely need to know about. Okay, this slide is a big one. A staggering 86% of their revenue comes from just their top 10 customers. And what's even crazier, one single customer makes up a third of their entire business. Think about that. If they lose that one client, poof, that would be a massive blow. That is some serious customer concentration risk. And the risks don't stop there. The price of raw cotton, which jumps all over the place, makes up 2/3 of their revenue. So if cotton gets expensive, their profits get squeezed. Simple as that. On top of all that, their entire business runs out of one single factory in Gujarat. Any problem there, a fire, a flood, a labor strike, could bring the whole operation to a grinding halt. So we have strong growth on one side and pretty serious risks on the other. How do you possibly decide? Well, it all comes down to the most important question of all. What's the price? Is this thing valued reasonably? And here it is, the bottom line. The IPO is priced at a price-to-earnings ratio of nearly 30. Now let's compare that to a competitor, Ambika Cotton, which trades at a PE of just 11. This means you are being asked to pay almost 3 times the price for Shree Ram Twistex compared to a similar established company. That's a very steep price tag. So where does that leave us? Well, for high-risk investors who really believe a big comeback in the textile industry is right around the corner, this could be an interesting high-growth play. But for more conservative investors, that super high price tag, combined with the huge customer and material risks, it might just be too much to stomach.
So in the end, it all boils down to one question. Is this an expensive growth story with a lot of potential, or is it just a high-risk gamble at a premium price? The fate of this investment might have less to do with the company itself and everything to do with the one thing it can't control, the turn of the textile cycle.